All right, so once again, good afternoon, ladies and gentlemen, and my dear fellow colleagues. Good afternoon. It's a very unique quote. I had never come across this until the time I had to do research on real estate, right? Not that I've not done research on real estate when I was buying a house, I have done it myself. But it's amazing. Now, to help us understand this, Robert Kiyosaki says real estate investing, even on a very small scale, remains a tried and true means of building an individual cash flow and wealth. Ladies and gentlemen, my dear colleagues, to understand all of this, let us now welcome Chairman, Anarock Property Consultants, Anuj Puri. Good afternoon, sir. Welcome to Reliance Corporate Park. He is the chairman for Anarock Property Consultants. Has over 30 plus years of experience in the Indian and the global real estate markets. Is a trusted advisor to lot many builders, developers, investors, and occupiers. Widely acknowledged for revolutionizing the Indian real estate sector. A visionary outlook with technology-based solutions. Is running Anarock across 16 offices with 1,800 employees. Until February 2017, he was the chairman and country head for International Property Consultants, JLL India, overseeing a team of 9,000 employees across 11 cities. He is a key member of the JLL Asia Pacific Leadership Group and a head of its Global Retail Leasing Board. He set up Anarock in 2017, immediately after JLL, and is now the largest independent residential agency in India. 1,800 employees, 16 cities, strong presence in the GCC countries, which is the Gulf, specifically in Dubai and Abu Dhabi. Anarock has a global footprint of 80,000 preferred channel and affiliates and partners across the United States and the United Kingdom. The most important piece, which I'm going to read right now. As an industry veteran, he has successfully handled marketing projects within the office, retail, hospitality, and residential domains. He has received significant national and global recognitions for his contribution to the real estate sector. And I want to cite them. He is the fellow for the Royal Institution of Chartered Surveyors in the United Kingdom. He's a director on the board of Jagran Prakashan Limited. He's a director on the board of Music Broadcast Limited. We all popularly know it as Radio City. He's a member of the FICCI Task Force on Smart Cities. He's a member on the advisory committee of the Maharashtra Chamber of Housing Industry and Confederation of Real Estate Developers Association of India. He's a member of the Young Presidents Organization. He's a member of the Construction Week India National Advisory Board. He's also the member of the advisory board of the Hotelier India magazine. His key awards, Most Promising Business Leaders of Asia 2018-19 by the Economic Times. The Pathfinders Award for the Most Enterprising CXO 2019 by Franchise India. The Real Estate Thought Leader of the Year 2019 by International Brand Equity. The India Business Group Excellence Award winner for the year 2019. Ladies and gentlemen, my dear colleagues, let us all welcome Chairman, Anarock Property Consultants, Anuj Puri.
Thank you very much for this warm welcome. I'm delighted to be here. It's fantastic. We come in here quite often. We have a number of friends here who work in here, Mr. Bardesh Gandhi, Mr. Satish Parekh. We do a lot of work on the retail side. So it's nice to actually be present here in this room. We did not know that this existed. So it's actually a delight to come in here and see this setup. Fantastic. Thanks for the kind introduction. It was quite embarrassing sitting in here and hearing all that. So thank you for those kind words. What I have here is really three parts that I have tried to do very simply as an investor, as a home buyer on the Indian real estate. What is really happening in the market, what I suggest that you need to do, some of the things that you need to be careful, some of the perceptions in the market. We've done a consumer survey, some of the results of those consumer surveys so that you can understand what the others are thinking. I mean, this consumer survey was done over 100,000 people. So you can understand what they are really thinking. And then lastly, I'll take you through one part that if you are looking to buy a home, what are the things that you need to be careful, and is it a good time to buy, not a good time to buy, and where are some of the protections that lies. First, this is quite an interesting slide. People think is that real estate is one asset class. Actually, it is perhaps the biggest asset class in the world. This slide, I just put it very quickly. If you look at it, the real estate itself, which is nearly $228 trillion, you add bonds, equities, all gold ever mined. Together, it still doesn't come up to $228 trillion. This is worldwide. Many a times people say is that real estate is only an Indian consumer's phenomena, that Indians love to buy real estate. It isn't true, because this does show that their real estate is a big asset class world over. In India, whilst we are all thinking that real estate is really downsizing and this is not really happening, it is happening. If you look at it, $250 billion of construction activity going on today, which is nearly 180,000 crores of construction activity going on. If you were to divide this, a lot of people ask me is that how much of it is residential, how much of it is commercial, what do I need to do? Should I invest in commercial? Should I invest in residential? I'll give you very simple so that you can understand what it really means. Today, 84% of this is residential. You move back to just before the Lehman crisis, 2007, it was 51% commercial, 49% residential. Today, the commercial is only 16%. 84% is residential. So that is the first problem that came in on the residential. Commercial is doing fantastically well. Zero problem. Every quarter, the rentals in commercial are going up between 1 to 3%. Every quarter. There was a REIT, Blackstone and Embassy REIT. I don't know whether you ever invested in that. In April, that product came up. What a REIT is, that you buy that stock, and in that company, all the offices that company has bought, the rental goes into that, and then they give a dividend, which is really the rental yield that you get. So it is just buying an office through that paper. And Blackstone and Embassy did their first REIT. They had listed it at about 300 rupees in April of this year, whilst the stock market has gone southwards. I mean, that is trading at some 380 or 400 bucks today, because everybody knows that the commercial story is intact. The leasing activity, about 3.4 crore square feet of built up office space, new office space comes up, and the same amount gets leased up. And that's why it is a fantastic story. Unfortunately for retail investors like us, it is not possible to play unless you play into a REIT listed. Why? This is the first mistake that retail investors do. They buy a small office, 500, 600, 700, 1,000 square feet. You're just not going to be able to lease that office. You lease it, it'll be to a small company. That company will never vacate it. Most of the big companies do not go into buildings which are strata title sold. IBM, Accenture, Cisco, Microsoft, they do not like to go into buildings which are sold to different investors. They'll go to a building which is held by the developer, one building held by the developer. So what happens in this case, the developer gets bailed out on the commercial. The poor investor gets stuck with these small offices which they're just not able to lease it. And if they lease it out ever, it becomes very difficult to vacate it. So commercial doing very well, but very difficult for retail investor to play. The second is the retail. Just like commercial, story is fully intact. Zero problem on that as well. The retail malls are doing exceptionally well. Consumption goes on. There are foreign retailers, Indian retailers, Reliance Retail, one of the major occupiers, continues to expand, and those retail malls are doing very well. Now, the first thing that the developer does is sell small shops. And we guys buy that. Absolutely a disaster. Zero ever buy in a mall which is selling shops. It is like a hotel. In a hotel, do you ever sell a room? You don't sell a room. You sell the full hotel. Retail mall is exactly the same. Never buy a shop in a retail mall, because if you buy a shop in a retail mall, that retail mall is set for disaster. Retail is like a wholesome product. You have to do events, you have to do promotion, you have to bring in tenants, you have to churn tenants, there is a tenancy mix that needs to be done. There is a lot of science behind that. If a mall developer is just selling small shops and getting out of that, who's going to be responsible for doing the events? Who's going to be responsible for doing the footfalls? And the retailers are not paying you rent. They are paying you a percentage of the revenue, which means is that you need to have the footfalls to be able to bring that in. So again, a lot of innocent investors, I find, poor guys have got stuck with those retail shops, and they're coming to us and they're saying is that, guys, can you please lease it out for us? It used to be 100 rupees. We are happy to do it at 50 rupees. We go to Badresh Bhai here, and Badresh Bhai says, boss, you give me free also, I don't want to go in. Because it's not about the rent. It's just that there is no footfall only that is coming in. Ultimately, I have to earn money from this shop. If I'm not going to earn money, how am I going to do this? So those are the two things that you have to be careful. Let me just very quickly compare your office to your residential, so that you understand why the returns are very similar between the office and the residential. So on the office side, a typical return that you are going to be able to get in is 8%. If you're a large investor, so you are able to buy, say, 10,000, 15,000 square feet, not 500 or 1,000 square feet, 15,000, 20,000 square feet in a building that is already leased out, and the developer is then selling it, you are buying it with the tenant sitting in there. The return is about 8%. Remember, what I'm going to tell you is very strong, because a lot of people ask me, iska rent kitna hona chahiye? Rent itna hona chahiye that if you are buying it for 1 crore, then 8% is your annual rent that you will get. So 8 lakh rupees is your annual rent on the office side. Now, the same 1 crore you buy on the residential, a lot of people ask me, what is the rent? I'm like, I am giving you the trick of the trade. You don't need to ask any property consultant after this ever. It is 2%, 2.5% that you get. Finished. You can calculate the rent on your own. So if you are buying a property of 2 crores, it'll be 5 lakh rupees a year rent, so which is about 40,000 rupees a month that you're going to get. Now, people ask that why will I ever buy a residential if the rental return on the office is 8% and the rental return here is 2.5%? Why will I ever buy residential as an investor? Today, it is not making sense. But rewind it 4, 5, 6 years ago. The capital appreciation on the office, absolutely. The capital appreciation on the office was 2 to 3%. So the total was 8 plus 2 or 3%, 11%. Here, the return was 2 to 3%, but the capital appreciation was 8% every year, which, by the way, has gone out now. And that's why suddenly everybody is wanting office, because here the return is only 2%, and here the return is still intact at 11%. But otherwise, traditionally for the last 40 years, only the last 3, 4 years, if you were to take it out as an exception, last 40 years, both total were the same always. It was only that the rental plus capital appreciation, and here on the residential side, small rental but large capital appreciation. That is where the total really added. And a lot of people ask this, that how does this rent work? You will know that how this entire thing today works. So as an asset, real estate still continues to be pretty well capitalized and well looked after. The second part, very quickly, consumer sentiment survey, which actually gave us a lot of insights and many contradictory statements as well. that came up in the survey that we did. The first, the average home buyer in 2000 was aged 54 years. Look at it, how in 18 years the average home buyer has come down. The age of the average home buyer is down to 29 years from 54 years. Second, real estate is still a preferred asset class. If you look at it, 57% still prefer real estate over gold, stocks, fixed deposits. Again, lots of people say is that no, we're going to be investing in stocks. Many of the stock guys only who come to us are really interested in real estate because, it is still a hard asset class. Stock is still a bit of a paper. Something happens, it's only a paper. Real estate is still an asset that that it is solid on the ground. Many of the stock guys, as I said, who trade on stocks would definitely want some real estate exposure within themselves. 60% of the people that we surveyed are wanting to take a plunge either in 6 months or within 1 year. So, all the people who are sitting in this room do have a thought that I do want to buy a residential. The trouble is, how do I buy? When do I buy? Are the prices going to go down? Is it the right developer? Is it the right location? What is it that I need to do? Which is what I'm going to cover in the next part. But it remains as a large asset class, and it remains of very keen interest to the home buyers. Nearly 70% of it want to buy it between sort of 40 lakhs, either below 40 lakhs or below 80 lakhs. So large portion of this want to buy within the affordable category. 52% on an average want to buy with the same developer who had actually developed it before. Except if you look at it, we didn't have NCR here. They say is that all the bad practices for real estate have started from NCR. And that's why the buyers are not wanting to buy from the same developer in NCR. But if you look at it, Bangalore, Pune, Mumbai, Chennai, it is a large portion of that. Why do consumers purchase home? 58% of it are using for their end use, but 48% of it are still looking at it as an investment. Pretty interesting. That means that 48% of it believe that the market is really at the rock bottom. And I'm going to cover that part as well. And they believe is that from here onwards, the market is going to start to take shape. 53% buyers are looking for rental income. Not going into commercial as much. They're still wanting to take residential and buying it for rental income. Why? Because they are saying is that today it'll be 2.5%. But as the capital appreciation of the asset happens, so for example, I bought that asset for 1 crore. Tomorrow that asset is 3 crores. My return on that 1 crore will move to 7.5 crores. Because the 2.5% is on that day's value of the residential, not on what you bought it for. So you may have bought it for 40 lakh rupees, but today if the house is worth 1 crore rupees, the rental return is on today's value, not of the value that you would have bought it at. So that is what they are looking at. 18% of the buyers prefer new launches, which has risen from 5%. And the primary reason of this increase, sharp increase, is because of Real Estate Regulation Act. And in simple words, I'll explain what Real Estate Regulation Act means. There are only 3 points in that, so that after this show, you will be fully aware what this really means for a consumer, for you as a home buyer. 38% of the buyers want it within suburbs. Actually, from the city center, if you look at it, people are starting to move out. 21% is the city center, 38% is the suburbs. People prefer the suburbs rather than really going into the city center. Small is the new big. People are preferring 2 BHK. 55% of our home buyers prefer 2 BHK. Only 3% of them are preferring the 4 BHK. This is very interesting trend. Huh? It was took us by surprise. If you look at resident Indians, I would have thought that the first home that they were really going to look at it is buy it in Mumbai. They're actually saying no. They're saying is that we are happy to buy in a tier 2, tier 3 city. If you look at Mumbai, it's really number 4. Part of it could be the prices in Mumbai. But it is Bangalore, Pune, then Mumbai and Hyderabad. But majority of them is saying is that we want in tier 2, tier 3. Maybe that is where the hometowns is. And that is where they're saying is that we want to buy in those locations. Maybe that is where they believe that the capital appreciation is going to be the most. And that is where they are wanting to buy. This market is consolidating hugely. So I'll give you some data and then you'll understand what this 56% I am saying is. In 2013, when the market was almost getting at its peak, India used to sell 550,000 new homes. If somebody would have woken me up at 2 a.m. in 2013 and said, Anuj, in 2019, 2018, 5 years later, how many homes India will sell? I would have said easily double. The economy would have doubled. The homes, number of sales would have doubled. It actually went completely the wrong way. From 550,000, we are now selling 195,000 homes. Full in entire India. If you compare this with China, China sells 1 crore homes. We sell 195,000 new apartments a year, down from 550,000 to 195. China sells 1 crore. China has 1,000 developers. We have 22,000 developers. 22,000 developers selling 195,000. That means not even 10 apartments per developer. That means not even one apartment per month per developer that it sells. And this is why we are saying is that in our opinion, there is no need for so many developers. Market, everybody is saying is market is consolidating. Oh, people are going to perish. These developers are dying. 5 on 10, 6 on 10, 7 on 10. We're saying there is not enough work. Look at the macro fundamental. There is not enough work for those many developers only. They should not be in existence in the first place. And that is where this consolidation is taking place. And we believe is that between 7 or 8 on 10 developers will perish in the next 12 to 18 months. Finished, which is very important for you guys. When you are buying your house, it is, remember this statement that 7 or 8 on 10 developers will not exist in the next 12 to 18 months. So you have to make the right choice whom you are going to back. Otherwise, you're going to be stuck like what people have got stuck in Noida with developers who are just not delivering. And even 2 on 10 developers, if you were to look at it, is still quite a lot. Because 2 on 10 developers will make it like 4,000 or 5,000 developers from 22,000 developers. That itself is quite a lot. Where are the market sizing is with 2 lakh homes, that's good enough. What is very interesting is that we are seeing new corporates starting to come into real estate. We thought, maybe Reliance will also come into real estate. They have decided to stay away. But if you look at it, it was Godrej, Tata's, Mahindras, L&T, Shapoorji Pallonji. New breed of developers that have come up is Mittals, the Airtel guys, Hero, TVS Chennai, Kirloskars, Birlas in Bombay, Piramals, Jindals. They were not there before. They are now saying this is a fantastic sector because it is becoming a very clean, very level playing field. Lots of these unwarranted guys are going out. This is now going to become mature. This is now going to become consolidated. This is how we are going to move from an emerging to a mature sector. And that is where you are starting to see that the home buyer is buying 56% of the supply only from tier 1 developers. So whilst you have 22,000 developers, there are 50 developers in tier 1. they are only going back and back to those guys and saying, yes, this is what we really want to buy, because they're saying is, we trust you guys. You have delivered in the past. We trust you. This is where the market is going to move to. So this, we believe, is there'll be only very few players. They'll be clean. They'll be corporate. For them, consumer is going to be the king. For them, it is going to be a much larger reputation that they have to protect with the consumer, because they're not only doing real estate. Real estate is only one part of the vertical. For a Birla, for a Tata, for a Godrej, for a Mahindra, for a Shapoorji, it'll be one part of their vertical. And that's where they're going to be very, very clear that we have to deliver to the consumer, and consumer is going to become the king. Now, the third part of my presentation before we open for Q&A is the home buying tips. Lots of people ask. I mean, I was saying to my mom the other day, I said, when we were young in weddings, you would go, people would graduate to meet up with the doctor. And they would want to meet the doctor and say, मेरे को ये तकलीफ है वहाँ पे. I said, I go into the weddings, अभी वैसे ही मेरा हाल हो गया. वो, everybody is coming, मैं यहाँ फंस गया, इसका क्या होने वाला है, उसका क्या होने वाला है. That is what it is. I am like, we should put in home buying tips so that, you don't come with these problems. So be careful, just understand what I'm going to now say in the third part of my presentation. So first, is it a right time to buy a property? Look, there is always a right time to buy a property. Always a right time. I wouldn't say is, if you were to ask me before, if you were to ask me today, if you were to ask me tomorrow, for a home buyer, it is always the right time. You look at it, how far is it from your work of place, from the kids' school, from the neighborhood. If you like it, I mean, you're not buying it to trade. You're buying there to live. So it's always the nice time to buy it. That is the first thing that I always say is, it doesn't matter, you're there. Today, you have the opportunity to negotiate well. Because today, a lot of these developers are in pain. So as a result of which, if you were to sit with a checkbook in front of the developer, you'll be able to negotiate well. But please do not negotiate well with a C-grade developer, because you would think that you saved 5 lakh, 7 lakh, but in that process, your 75 lakh or 1 crore will go down the drain, because that project will never come up. Negotiate with a good developer, or negotiate on a project which is near completion in there. Don't be happy that I sat down with a C-grade developer and I negotiated and got a good deal. Lots of people come to me and they say, but you have the RERA. मैं बोला रेरा क्या करेगा, उसको जेल में डाल देगा, आपका घर तो नहीं मिलेगा. So you don't think that RERA is there, that is going to protect. RERA will do, I'll tell you what it will do. But it will not give you your house. RERA came in, did the guys from Unitech Homebuyer, JP Homebuyer, Amrapali Homebuyer get their homes as yet? Not as yet. They're working to resolve the case. So don't think that there is a law, there is a compliance, and that you're going to be protected. It is caveat emptor, that you have to be careful and you have to make sure that you are protecting yourself. How are you going to protect yourself? First, do your research properly. So make sure that you're going to the website, you're using the social media. This is fantastic. I mean, with Geo coming in, you can really use the social media extensively. You'll get the reviews of the developer. You'll get the reviews of his past work that they have done. Whether there was a delay, you will get reviews of how the performance of those buildings are, whether the quality of the building, not the building that you are going to buy, because that is not yet complete. The building that he did in the past. How's the people, the residents living in that building really liking it? Did he delay it? Did he manage the building? Did the quality of the building was good? Did the transaction go smoothly? Majority of that you'll be able to see on the social media. The online listings. Many people do not do in new homes when they buy physical site visit. I'm saying you must do physical site visit. It is such a large investment. In your lifetime, it will be the largest investment that you will ever do. Why would you not find the time to do the site visit? And this is particularly true for NRIs. And they are the most gullible. in this, because builder goes overseas, and we find that in GCC particularly, they go out and sell. These guys have no idea. They think we negotiated very well. We're like, stupid guys, don't. I mean, come and have a look at it. Where it is, they are going to say Kalyan. Kalyan, matlab. So please do site visits. There are lots of, Upper Thane and, lots of places that are being done. Which documents do you need to check? Best, you will not understand much of it. Best is to make sure that you're buying a property where there is a scheduled bank who is given loan, who's giving you a home loan, because they would have checked majority of these documents in there is. But please do appoint a lawyer. Why? Because, the bank would have given home loan. The property now gets stuck because either the title or whatever, there were issues. Home loan company is not going to stop asking you for your money. The poor guys who bought from Amrapali or JP or Unitech are paying rent and are continuing to pay EMI. Home loan is on you. It doesn't matter. And there is, so, please understand that doesn't mean that if he's sitting at the developer's site, that if there is any problem, your home loan is going to stop. Your home loan is not going to stop. The risk is on you in there. They may have done their due diligence, but ultimately if their due diligence was wrong and your due diligence was wrong, they will still ask you your money. They will still ask you home loan in that is. So please do appoint a lawyer, take these documents at that time. I'm going to pick up one in this. You should look at everything right from the location, the reputation, but I want to pick up RERA on this slide. There are 3 things that the RERA says, just 3 things that the RERA says. One, Mr. Developer, whatever time you are saying, you have to deliver in that time. Now, this is a statement that many developers will say, sir, मैंने तो RERA में लिखा है 2023, 2024, but मैं तो जल्दी दे दूंगा. No. You should then bear in mind that you will get it in 2023, 2024 only, because that is where the law will hold him responsible, not what he said to you in that is. And many developers are keeping a buffer of a year or 18 months. That's okay. But that's the date that you have to refer. If you think that you have to move into that apartment, don't be gullible to say, but the developer is saying is that I'm going to give you in 18 months. Look, the building is almost complete. We guys are naive. We see the building from outside. It looks like the structure is complete. Structure getting completed is only 40% of the money gone in. 60% of the money is finishing. We think a structure complete ho gaya, so 80% of the money is done. In that, it's only 40% that is gone. 60% is in finishing. So go with whatever the date in RERA is written. RERA is available. It's online. You don't have to do anything. You just type the name of the project. RERA website comes in. Fantastic. You'll be able to see. Second, 70% of the money received from each installment has to go into an escrow account, which will be utilized for construction of the building. Why 70%? Why not 100%? Why are you allowing the developer to take 30%? The RERA authorities allow them to take 30% because the land is always paid through equity, which means he's put in the money on the land. So with every installment, the assumption is 30% of it is towards land, 70% of it is towards building, and that 30% you give his share to him of the land on every installment, through which he runs his corporate office. That's also the expense that he needs for the corporate office. So a lot of people say, no, but 100% should be kept in the escrow account. We say, no, that is wrong, because 30% was what he put from his own pocket. So if the total project cost was 100 crores, we assume 30 crores was land. Every installment that you are paying, he takes his 30%, 70% is put into the escrow, which is utilized for the construction. Now, if the developer goes bankrupt in that process, zero problem. Because either the society can take over and complete it because the RERA chief then gives the money to you, or another developer can step in and complete the building, because 70% of the money is intact. And he cannot take away that money. Only in construction that money can be utilized. The trouble in NCR is Why these projects are not getting completed? Because the balance installment that is left from the home buyer is insufficient to complete the building. Because more money has been taken from the buyer and out of the system, and the balance installment is incomplete now to complete it. Otherwise, so there was no problem. Any new developer would have stepped in and said I'll complete it. Now when they do the math, they're like, if I get the balance money from the buyers, I cannot complete this building. So this is what RERA did. The second thing is that 70% of it is into an escrow account. That money has to be kept for construction. And the third is, please specify what is the construction quality, design, and the products that you're going to utilize. And it is fully elaboratedly written in that is, and that is exactly what they have to give. They would put fancy pictures, photographs, boy and a girl, and all sorts of things in their swimming pool and gardens and trees and everything. Look at it, they can't do anything like that now. Any representation that they are making on the brochure has to be absolutely accurate. It cannot, if they're showing something, they will need to deliver that thing. That is what the RERA says. So these are the three things, but it doesn't say if he doesn't do it. Yeah, you're going to punish him, you're going to take him to jail, but ultimately, you're not going to get your house. So that's where I say is that be careful. Still do your full research. It is not that RERA aa gaya, abhi to theek hai. RERA aa gaya to, that's okay. But make sure that you're doing your full market research. You're checking from the previous home buyers. You're checking from the reputation, location, market know-how. There are three types of payment plans. The middle one is disastrous, and this is where people got caught out mostly. It was, कि हाँ sir, construction linked hai, we'll do time linked, pay me after every 3 months. And gullible investors signed it, every 3 months I have to do the installment. Every 3 months, we put 4 slabs. And so, at the beginning of every quarter, you give me my money. And the poor guy thought, theek hai yaar, every quarter banti jayegi, and I'm going to give it. Little did they realize that even if the building is not getting constructed, you have to pay. Because you signed a time-linked plan. You did not sign a construction-linked plan. In law, he is correct. Irrespective whether he delivers to you or not, you have to continue to pay him. Because that's what you said, pre-decided timeline for payments. So a lot of these buyers got caught out in the second category, particularly the NCR guys got caught out in the second category, where they've had to continue to pay, otherwise they're at a default. From a contract perspective, this is what RERA is trying to address as well. They are trying to address that you cannot do these time-linked payments. You have to do construction-linked payments. That, at Plinth, you'll be able to charge maximum of 40%. At the third slab, fourth slab, like this, they are saying is that every slab you charge a certain percentage. They don't do this thing, where you are getting caught out on the time. If you unfortunately do get caught out, these are the 3 ways to get out. So the first one is RERA. Second is IBC, and I'll explain you in simple terms what it means. Third one was always there. Consumer protection used to take 20 years to do it. The first and the second are the new ones. RERA, you've understood it. You can complain to the authorities if it is not delivered on time, or if the money did not go into the escrow. Money has to go into the escrow because bankers are managing that entire thing, or if the quality wasn't right. What IBC does, very interesting, really interesting, not many people did understand. What IBC said is every home buyer is to be treated as a lender. Every home buyer has to be treated as a lender. All of you who bought a house have a seat on the table just like what a SBI would have given. Absolutely the same seat on the table because you are a lender. You are one individual lender, the same seat on the table as the State Bank of India would have given 100 crores or 200 crores to the project. You may have given 10 lakhs. You have the same seat on the table in there. You can take him to NCLT. You can take the developer to NCLT, a loan guy in there. This is where the developers have got really, really stricken. I mean, I was just coming in here and there was a guy from Times of India. He called me up. Probably the news will be out tomorrow. He said is that the NCLT cases in the last 12 months have doubled. I said they have doubled because of this. Because any consumer can take the developer to NCLT, which wasn't the case. And NCLT is quite quick. By the way, consumer protection would have taken 20 years. RERA is also very good, but RERA has limited powers. They can give a penalty order. The developer can challenge that in the court. RERA is not the highest authority. Above RERA, if I'm a developer, I can take it back to the court. Likely that that the courts will look at the verdict given by RERA more favorably, and hence the developers don't want to take it to the court, but they can easily drag it out. This thing. NCLT, they have to immediately come to your home because you've taken them to insolvency. The proceedings, and many of these projects also have their personal guarantee, corporate guarantee. Everything then starts to fall like a pack of cards because the corporate guarantee goes straight up to the corporate, and on that you start to do the insolvency proceedings in that. So very interesting what had happened is when they said is that home buyers have to be treated like lenders. Every home buyer became a lender, and you have a seat on table, and if this is not being delivered, you are being able to take them. Last 2-3 slides, some of the places I said is let me just do NCR and Bombay very quickly to buy, to rent. I'm a big favorite of Panvel. I think that is a fantastic destination. I think infrastructure-wise, it is fantastic from social, physical, workplace, airport, connectivity, pricing. I think that'll be a place that over a period of time, you will see capital appreciation. Those are on the rental side. On Delhi, a lot of people are scared of Noida. I still think that it is one of the best places, Sector 150, to do it. This is where most of the corporates like Tatas and Godrejs have gone. This is a good place to do. My last slide, sort of little scary slide in that. How many apartments are unsold in India? I told you 1,95,000 apartments get sold every year. 6,56,000 apartments are unsold. This is how we have drafted across. If you look at it, MMR is amongst the highest. 2,20,000 out of the 6.5 lakh apartments that are unsold are in Mumbai. Now the question is, why are the developers not bringing down the price? If this is what the unsold inventory is, why are we not seeing reduction in the price? 2 reasons. Some of them have. Some of them, the new apartments, they're shrinking the size, not necessarily bringing the per square foot price down, but the overall ticket price has become a lot more reasonable. You would have seen, certainly with the government tom-tomming on the affordable, lots of guys have moved on to the affordable. 2 reasons why they're not being able to build. In a project which is half sold, they have sold it at a higher price. Now you're asking in the same project for them to sell it at a lower price. The guys who have bought it at a higher price, is going to be tough for them. I mean, think of it, if you were the guy who bought it at a higher price and I bought it at a lower price, you're going to go to the house of the developer and say, boss, maine kya galti kari hai isme? In fact, I'm the one who actually bought earlier than Anuj did. Why are you penalizing me by giving at a cheaper price to Anuj, who came 2 years later to me? Then bring me down at the same price only. The developer has no money to refund that proportion. And the buyer will just not give his next installment because he'll just say, boss, main deta hi nahi next installment. Because I want to be equated to Anuj. You did not deliver the project to me. Had you delivered the project to me, I can still understand. कि भाई मैंने गाड़ी खरीद ली, गाड़ी सस्ती हो गई, 5 lakh rupees. I can't go back to Ford and say, yes, give me back my 5 lakh rupees because 2 months later you sold it at a cheaper price, 5 lakhs. If you haven't given the product to me in there and you are selling it at a lower price, then I should get the benefit. Or then I'll cancel this and then buy in the new scheme. I'll cancel this, pay me back my money, I'll buy it in new scheme. That's the first thing. That why they're not able to do is. Second is that the debt on them is very high. Again, no problem. I mean, it doesn't relate to you. The debt is high. But the debt is high and there is a cover there's this debt. So the debt is as 100. The cover will be at 80, 70, 65. Now you're saying is, and that cover is like 1:3, 1:4 you have to keep. Now the moment you bring down the price further, the lender will ask for an additional cover from the developer to say is, I need my protection in there. He has no cover to give because all his cover is already mortgaged. So he is not wanting to bring down the price because of these two reasons, that one, half of it is sold at a higher price, and then he's going to have some problem with the guys who are given who have given the debt. So we think is that many of these developers retaliated first. In the last 12, 24 months, they've really retaliated. They have reconciled. They're coming to our offices with folded hands and saying, sir, हमें बचा लो, जेल नहीं जाना. Like, क्या हुआ? नहीं sir, ये वाला हमारा project, please give it to somebody else. Get in a Godrej, a Mahindra, a Tata, somebody else to complete this project for us. They have reconciled. They have reconciled, but they're happily reconciling. Why? Because they're not thinking that we are going out of this sector. They're saying is, we are, sir, becoming land manufacturers. What it means is that we will continue to manufacture land, buy it from the slum guy, buy it from the farmer, get in all the approvals, clean the land and everything, and then go to Godrej. And so we will make money in the arbitrage, and they will make the money in the arbitrage. There is no problem with that. So they are now becoming B2B land manufacturers, and then there will be few developers that will be left, which will be the consumer-facing developers, which will be the B2C. So that is what is happening in the residential space. So post the retaliation, it is now a reconciliation that they have come to say is, this is not a game for us to play, will not be able to play this game. There are more better players, well-capitalized, good corporate governance, good teams, good financial discipline. They are the ones who will be able to do good brand name that they'll be able to do. If I am not able to complete this, I'm going to be taken by the lenders, by the home buyers into NCLT. All sorts of agencies will come on me. And then I'm going to be in big problem. And that's why they're coming and saying is, please do this. If NCLT and RERA wasn't there before, and I've seen this, I've been in this industry 25 years, I've seen it in the past, zero problem that they would have had. Bola, wait karne do na, inko kya problem hai? 10 saal aur lagenge project mein. Now they're not saying that. Now they are कि boss ये तो NCLT ले जाएगा वहाँ पे. Previously they would be ठीक है sir, आप देख लो Consumer Protection Forum जाने चले जाओ आप वहाँ पे, but it'll take you 10, 15 years to do it. So you have to wait patiently with me. Today that's why they're coming to us to say कि boss हमारी equity wipe off हो गई, कोई problem नहीं है, पर boss जेल मत भेजना हमें इसके अंदर, because we know under these laws you can. We were counting 51 developers. 51 developers in Bombay and Pune have gone to jail. 51 developers. People think is that these laws don't have teeth in there. हमने सोचा पहले अभी, let's do for North as well. Then we decided कितने बार हैं वो निकालते हैं. So it is a very nice segment that is emerging out of this. So we are in that flux, I would say, maybe another 12, 15, 18 months more, that you will see on the other side of this sort of tunnel, that there'll be very few corporate governed, well-disciplined developers who are going to be able to really look at it as an industry and continue to deliver. So that's where I wanted to end, that post-retaliation, it has become a reconciliation phase where each one is finding their own side, a land manufacturer and a developer. So that's all that I had.
Thank you, sir. Can we open it for Q&A?
Please.
All right, so can we also have some house lights, please? So we have microphones all across the auditorium. There is a question right up here in the front, Rashi. There's a microphone there.
Good evening, sir. Thanks a lot for your
Most welcome.
See, you have covered almost all the things. I would like to cover this redevelopment area. Can you please?
Yep, absolutely. So most of the good developers will not go into redevelopment. most of the good developers will not go into redevelopment. You will not see good developers coming into redevelopment. Why? Because of two reasons, and that is, slum is largely easy to do. Because what you do in the slum is you rehabilitate these guys. You can actually do it in situ, which means you can do it on that plot, or within that ward, you can do it, which is sort of relatively easy. Also to control and manage it is easy. Society redevelopment में बहुत दिमाग वाले लोग होते हैं. So, society pull, push, lots of problem. Second, they have to be rehabilitated in the same building, in the same compound. Now, there is a differentiation in the economic strata that comes in immediately. In a slum, that guy's got a separate building, perhaps not even at that site. In a society, it is the same building, where you will have different economic strata because the guy who's buying it today new is of a different economic background than the guy who's in the society who's inherited this for the last 20, 25, 30 years. It's very difficult to do a sale of that society redevelopment. So those are the two things where many developers are staying away from society redevelopment, still wanting to get into slum rehab. Because saying it's very difficult to societies, there are lots of members of societies, they're very well educated, and there's a lot of pull and push, and to manage these societies is very difficult. Second, that you are really cohabiting two stratas of the economic stratosphere together, which can become challenging for the incoming guys, not for the guys who are at in the society. And you will see some of your own examples if you were to take it up. These societies have been there for 20, 25, 30 years. At the time that they would have bought it would have been a certain value. And it'll be a different economic strata to what the developer would want to really sell it at. And the cohabitation then becomes difficult in the clubhouse, in the swimming pool, in the common recreation areas. And that's where the new home buyer who's coming in says, look, it's a little challenging for me to stay in this environment.
Yes, next question, microphone, please.
Yeah, thank you for the insightful talk. My question is on a property which is ready and bought by a consumer like me. Why there are no warranties on the quality of the construction, right? Like we have it for everything else, but when it comes to the bigger value of assets like property,
Yes.
maybe crores in that.
Yes.
There are no warranties. I mean, I can take insurance and I can do other things. But on the builder, there is no restriction if the quality of construction is not good.
Under RERA, there is a 5-year warranty that the builder has to give you now. So now, you're absolutely right. They did not give warranty. I mean, in a car, you get a warranty which you are buying for 5 or 10 lakh rupees and you've got a warranty for a year on replacement. In a product you are buying for 1 crore or something, you're not getting any, this thing is 5 years under RERA that they have to give a warranty. I think the gentleman here. No. Under RERA, 5 years, the developers has to give the warranty. He can pass that warranty to the society. So many of the people will get Mitsubishi Lift or Otis and take a 5-year contract from them and give it to the society. But it is the developer's responsibility under RERA. Also, just one very quick thing, I'll give you a clarification, is RERA is not only for new projects that are starting construction. RERA is for any project. It came in June 2016. Any project which did not have an occupation certificate was under RERA. So even if it meant it had started in 2012 and it had not given you an occupation certificate, it was under RERA.
Question there, right there.
Thank you, sir. I would like to have your views on a resale property which is about 25 to 30 years old from today's date. And if at all you are pro for it, what would be the documents that would be required to be checked?
Am I pro for it? I'm quite okay with the older property. There's no problem with that. There are, as I put the document list, those 6-7 documents that you have to really look at it. In fact, it becomes a little easier to do verification on an older property because you would usually have all the documents in possession. Two things that I would say is on the older one. One is, many people would say is कि ये तो ऐसे ही है, चलता है. I'm telling you is that today India has changed. ये चलता है, नहीं चलेगा. So, if there are no papers and they've been living for 25 years, do not buy it. नहीं चलेगा, some state they will get caught out. Balcony है, ये तो chargeable area में ही है, you flower bed hai, nothing. So I'm saying is please take it by the book. A lot of these guys that have got into trouble, the corporates, I'm just deviating for a minute, our people are accusing them. I'm saying, at that time the regime was like that. I mean, you talk about 2013, 12, 11, 9, regime was like that, and then, in that you were doing what those things were that you were, the corporates were doing. Today, on reflection in the rear view mirror, it's very easy to say, why did they do that? I am telling you straight away, do not get into these things, because at some stage they will get caught out. It is becoming a highly compliant environment. The second is, resale properties 25 years old will be very difficult for you to sell it again. Because there aren't those many facilities, and people want facilities today. So if you are buying it, then be very careful that resale of that will become an issue at a later date.
Thank you, sir.
Next question here. I know there are too many questions, but let's yeah. Great.
Hi. Thank you, GeoTalks team, for arranging this session first.
Thank you.
Okay. My question is with respect to the current scenario in Mumbai especially. If you go for a 2 BHK room, I will say, currently in decent location, it costs around 1.8 CR to 2 CR. Currently, the trend that is that the property prices are not moving up. If that's the case, why shouldn't the person wait for 1 or 2 years and then purchase this particular property first?
Correct.
And second, if in the same area you have a resale option, then what should be the viewpoint with respect to that?
Yeah. I think the very, very interesting 2 questions is that, the first question is that I am not seeing the property prices move up. So why should I buy it today? Is that correct? That's the question, is that why should I buy it today? Because I'm not seeing capital appreciation of the property. And second is, should I buy a resale property which is completed, or should I buy a under construction property? Look, the market works on 2 factors, fear and greed. So real estate market works on 2 factors, fear and greed. Today, none of those 2 factors are really working in favor. So there is no fear that this stock will go away. There is no greed that the capital appreciation will happen today. So difficult to do it. Yet sales are happening, 1,95,000 units, they bought it. It is about, can I get a better quality apartment? Can I get a Vastu compliant apartment? Can I get a better located apartment in this building? Within that building, there will still be stock that will be available. Can I get a higher floor without paying the floor premium? That is where people are negotiating today. Otherwise, you're absolutely right. I don't think in the next 6 or 8 months, you're going to start to see price rise happen. At some stage, I'm telling you, price rise will happen. This is a falling knife, because at some stage, so many developers will get out, you will start to see the cut between the supply and the demand happen. I mean, law of economics says the moment your demand will start to go up and your supply will be flatlined, you will start to see the price rise happen. But I do not foresee in the next 6 to 8 months that happening. So why the first question is you will buy is if it is a value that you are getting, which you believe is that in good time, I may not be able to get in that value. Second, it is a better located apartment on the same floor, which may go away. There will be other apartments, but they may be less Vastu compliant, or they may have less sort of airy rooms. That's the only reason. Otherwise, you can wait for 6-8 months very easily. Second is, would you buy a second hand, or would you buy a new home in there? My answer remains the same, that on the second hand, usually the facilities in those older buildings weren't there. There wasn't a gym, there wasn't a swimming pool, there weren't play areas, there weren't other things. We're finding that when you go out for resale, they're usually tougher to sell it, because a home buyer usually wants to buy in a building which is newly created with like-minded people of the same economic strata. In there. In an older building, if you have relatives, lots of people will do it, or if you have got school kids going in that vicinity, you will buy, or if you have workplace and the new building isn't coming up in the timeline that you envisage, then you will go out and buy. Otherwise, resales, people are not as keen, unless it's a very nice township, and then they will be very keen to do that.
Yep, in the center.
Hi, sir. I'm the regular follower of in Twitter.
Right, thank you.
Okay. So I would like to ask you in that you initially started the REIT. Could you please throw some light on REIT? So what is happening? And second point is you said for residential purpose, residential apartments is 2.5% is you're saying about, right?
Correct.
For commercial purpose, there is a lot of
8%.
8% is there. So as in a salaried employees, so are we able to get that much of loan? So we supposed to take over 10,000 square feet, 5,000 square feet. So is the banks are able to lend us? So I need 2 points.
Yeah. So the first point is, what is a REIT? I said that. And the second point is that if I was to buy commercial, would I be able to get a loan on a commercial property? The first one, I'll put a asterisk and put a caveat. I'm on the board as a board of director, independent director on the REIT. So I may be very pro to that. So I just want to make sure that you are aware. It is a fantastic instrument. What is a REIT? It really, and this is Blackstone, by the way, who's one of the largest, not one, the number one developer in India is Blackstone today. It is not a DLF, it is not a Raheja, it is not a Hirandani, it's not a Prestige. Number one developer in India is Blackstone. And there is 43 million square feet, which is 4.3 crore square feet of offices that they own. What is REIT? They bought this 43 million square feet offices. Now the rent comes in every month into that. They're just distributing that rent only. That's all. You are playing the game of offices through a REIT platform. They manage those properties, they release it, they make sure that they're upgrading those properties, they're churning the tenants in those properties. So whatever rent, every quarter, not even yearly, whatever rent comes in there, they just distribute it to the shareholders. They call it as unit holders. So that is what a REIT is. REIT is a play of office rentals. That is why it is a very stable product. It is a very stable product. It is not dependent on the sale price, or it is not dependent on the delivery. 90% of the portfolio has to be income generating. Only 10% risk they can take in that is. So that is a REIT. Interesting thing, I think you will see more REITs coming in. That's why it's trading at a premium, 300, and it went to, 410, probably down to 380 in that is. The second question was that do I get a home loan? Do I get a loan on a property? So we call that as LRD. What a LRD means on a commercial property, lease rental discounting. So the bank will give you lease rental that they will discount for 7 years and give that much money to you. For 7 years, if you've been able to lease a 5,000 or a 10,000 square feet, you go to HDFC or ICICI or SBI and say, sir, here is my tenant, here is the building. They'll be able to give you the lease rental discounting. So 7 years discount, they will do it at whatever 8-9% per annum and give you that money, which is usually about 65%. The rest of it, you have to put it. Usually the LRD is higher than a home loan. Home loan may be at, say, 9%, 9.25%. This will be at about 10.5%. I don't know who's got the mic, so I am.
Good evening, sir. This is Nandan Chavalaya. So 2 questions. One is, nowadays what has happened is a lot of developers are filing bankruptcy.
Yes.
So like recently must have SDI, Lokhandwalas and all that. So I just want to know, is government taking any measures to safeguard the customer? That's the first question. Second question, I do have a flat in Pune which is costing 1,40,000, 1 crore 40. I'm getting a rental of 25,000. You're saying the percentage is 2%. So do you expect me to sell that and invest in 8% FDs and all? Thank you, sir.
So on the NCLT, I think the government definitely has is looking into it. I don't know whether some of you recall, or 2 Saturdays ago, the Honorable Finance Minister came on television and said is that package 3, which was a bailout package, was for real estate. I don't know whether you noticed. And they said 20,000 crores trust fund. that they had announced in that wasn't for NCLT. That is for projects which are likely to go into NCLT. So the first thing that they have addressed is that let's give monies to the projects which are likely to go into the NCLT. So they're calling it as last mile funding. That 80%, 85% project is complete, last mile is left. Please take this money from the government and then pay it back after you have completed and sold that project. The ones that are in the NCLT, it's very complicated now. It's not that easy. We've seen the ones in Noida that have gone into the NCLT. They're finding it very difficult. The government is really looking into it. It is too complicated now. One, this has gone beyond the finance ministry because it does involve the RBI now. Second, it involves a lot of lenders to do it. So I would say is any project which has gone into NCLT will take time for the home buyer to do it. I think the government has rightfully first stressed on the point that the projects that are likely to go off the table into the NCLT, they're stopping that there and saying is, let me address this with 20,000 crores of the money. So NCLT will take time. We've seen it. It hasn't happened in some of these cases. I think the Honorable, the Supreme Court has given a verdict on Amrapali. We will see in the next few weeks how that verdict really plays out. I don't know how many of you followed that verdict. It was quite an interesting verdict that they have said is that they've appointed NBCC to say is that you need to complete this project, and they have taken all the assets of the promoters and they're liquidating those assets and giving the money to NBCC. NBCC is charging 7% to complete those projects, but we'll see what that where that goes on, because the trouble there is that the home buyers have to pay their installments. They haven't come up front to pay that installment in that. Second is, would you want to sell the house that you're getting the rental and invest it into commercial? I would say is, just stay put. It's like a little bit of a war type of a situation going outside. It says, be home just at this moment in time. Don't do much. Don't do any exciting stuff.
Yeah, question there. Nupur.
Sir, thank you for sharing your thoughts. Just one question. Can you share your thoughts on land as an asset class in perhaps Tier 2, Tier 3, not so much in Mumbai, Delhi, but
yeah,
please. Thanks.
So, there's a lot of fascination as Indians with land. We love to buy land. We've seen in the past that land appreciation has happened. If you look at it in Bombay as well, every delay that has happened has profited the developer, because not anything that he did a better quality product, the land price went up. As a result of which, every delay has profited the developer. I don't think that is going to go on. As India, there is enough land. I mean, when you're landing into Bombay, 5 minutes before landing, you see there's enough land on either sides that you see. And then you wonder is, why are we paying 1 lakh rupees a square foot? That's because India never put the infrastructure. The moment you start to put infrastructure, why I said about Panvel, that is when it opens up. Nowhere in America, in UK, in Australia, land prices are like this. Bombay, South Bombay, per square foot, highest land value in the world. And there is, what do you see from outside that apartment slums? So it was just wrong because we had not put in the infrastructure. The moment you put up the infrastructure, large land parcels open up. It was only about the supply that was there. Now your question is in Tier 2, Tier 3. Still, in Tier 2, Tier 3, you should be able to buy it because the infrastructure hasn't reached many of the Tier 2, Tier 3 cities. My one big problem of land is, guys, you need to know how to protect your land. Absolutely. I mean, I'm one of the sufferers. I'm in real estate, but I am a sufferer in land. Somebody came and tied his cow in my land. And till date, I have not been able to vacate that cow from there. So please make sure that you know how to protect it, fence it, do a boundary wall. There has to be somebody every quarter who's visiting the land, checking that everything is, okay. In that it's not easy when people just think, I'll buy land and do it. And second is, it does not give any return. It'll only give you a capital appreciation unlike the commercial or retail or residential, that there is some return that you get every month. Land, you will not get a return. I think the gentleman
Question
here,
here, question there, and question there. So I can see 5 hands. Should we do the last 5?
yeah,
You're okay with the last 5?
I'm okay.
So let's do this first.
Yeah. Hi, sir. Thank you for sharing your thoughts. My question is to relate to the under construction flats. Let's say an agreement happened between buyer and the developer, and developer doesn't give the flat within the timelines.
Correct.
So what is the grace period actually buyer has to see, let's say in agreement closed in the month of September. So till what time developer should give the possession to the buyer?
So it'll be written in the RERA.
Okay.
You have to just see the RERA and it'll be given. Otherwise, the penalties will start to come in to the developer.
Grace period, or let's say the agreement is in September, so by 1st of October, the penalty charges started?
Yeah, so RERA does give you a recourse of 6 months.
Okay.
To do it, and in that you have to say is that the buyer has to say is that there is some problem that happened in the land which was beyond my control, in that the permissions got delayed or something happened is, but under RERA 6 months is the most that you get, otherwise the penalties start.
Thank you.
Excuse me, sir. My question is extension to earlier question, because RERA is having 6 months extension and all this thing. One of the project which I see in Pune, where builder has forcefully taken the consent letters from all stakeholders, extending another 1.5 years. So what is your advice on that?
आपने क्यों दी थी letter?
Because see, for home buyers, there is no option because home is not getting.
Easily an option. You could have gone to RERA at that time to say is, I mean, you've now given it. I mean, you've cut your hands and given it away. I mean, I don't think so. You can now go. You've signed a contract to say is that we're giving willfully to you for another 1.5 years. Today, for you to retrace and say no, by the way, I did not actually sign that. I don't think the court is going to be benevolent on that. They'll say, I mean, you're an educated, mature guy, open eyes, you signed the letter. The law was there. You could have taken protection under the law. You decided not to.
But do you really feel for flat or home buyers, really we have the choice. Either you have to sign or you have to forgo the money. That is one part. Second part is, that stage-wise payments,
yes,
wherein you have said that construction, the nationalized bank, this due diligence had happened, but still the builders and banks works hand in hand, right? And they just for merely as a formality, you have to give them signed, instruction to pay, even if construction is not happening as per construction.
Which is like, there's like absolutely a gullible guy who's got really caught out. You're absolutely right. And, you're not the only one. We see a lot of people do that. And so, hopefully this presentation is going to be educative, that do not sign that middle payment, which is what has happened in this case is, sir, this is a contract, you've signed it. You'll have to sort of live with it. I don't think so it is possible really under the Contract Act to say is that I signed something, but I'm not now going to adhere.
Yeah, sir, third thing is, you have said
digging
that
grave deeper and deeper.
Yeah, there are 3 instruments which we have, like RERA. RERA is now, you have explained very well. Second is
NCLT.
IBC.
Yeah, IBC.
Yeah, second is IBC. Again, while going to IBC, taking into NCLT, again, we will be home losers.
Yeah, no, good point in that is. So NCLT is very quick in its action. So the admission of liability in NCLT is very quick in there. So my suggestion is that if the home buyers come together as a society and were able to go out and represent in the NCLT, you can, one important point that I would like to highlight in this is, RERA and NCLT are independent. You can file under RERA, same time you can file under NCLT. It is not that you have to file first with RERA, then with NCLT. You can do both simultaneously. So in your case, you can go into the NCLT, plus whatever RERA gives the verdict, you can still challenge it in the court of law. So my suggestion to you would be is get the home buyers together and then go into the NCLT.
So let us welcome Mr. Jyotindra Thakkar, President Reliance Jio Infocom Limited, and hand over our small token of appreciation to Mr. Anuj Puri.
Thank you, sir. Pleasure to be back with you.
Once again, thank you, sir. Thank you to our beautiful audience.